It's hard to believe that at one point in time, credit was really optional. Nowadays, credit is everything if you need to borrow money. And credit can really be a useful tool if you use it correctly. But if you don't treat it with respect, it can very quickly become your worst enemy. So let's talk about how you can build your credit. Hey everyone, and thanks for joining me today. My name is Matt, and as I was kind of saying there in the beginning, today we're going to talk about how you can build your credit score. I know when I was fresh out of college, I had an extremely hard time kind of getting my feet on the ground when it comes to building credit and getting approved for credit cards. Even though I still had student debt and was already making payments towards that student debt. Fortunately, I was able to utilize a few tricks that helped me build a credit score, and that's what I want to pass along to you today and hope that I can help give you better chances of increasing your credit score. So let's start off by saying why credit is important. It's one of those things I was always told that, you need a credit card, you need to start building your credit, and I never really understood why. I had a debit card, it paid for everything that I needed, and I just didn't necessarily understand why I now needed another credit card. But then I realized the main reason, or at least the main reason to me on why having a credit card or building your credit is important is because it gives you access to money for cheap. Now by that I mean if you had the higher credit score you have, the lower your interest rate will be. So that means that you will ultimately pay less for borrowing money. And if you have a low credit score, then you're going to be charged a higher interest rate, which means that you will be paying more to borrow money because you could be viewed as a risk. And there are many ways for you to actually start building your credit, but generally the two easiest ways for people is either through credit cards or through student loans. Student loans are an easy way to get started because generally on those loans you'll have a co-signer, and the people that are lending the money for your student loans understand that you're in college, so you're probably not making that much money at that point in time, or you might have other debts that you need to handle, and so they have a little bit more leniency when it comes to loaning money to students. And again, it's just a good way for you to actually get a loan and then start paying it off once you've graduated. And credit cards can really help as well because you'll generally start off with access to smaller lines of credit. I think my first credit card allowed for me to have only $1,000, which is really all I needed to get started, and I didn't want a large line of credit because I didn't want temptation to take over and have me spending more than I could really afford. When it comes to loans, especially with student loans, it's always important, if you're able to, pay off more than the minimum balance. I know when I first started, generally, I think it was like the first year of me paying back my student loans, I had it set up for automatic payments, didn't miss a payment, and was thinking I was doing everything correctly and kind of just had it on autopilot. I didn't really think about it, I didn't check the balance on my loans that often, and a year after making consistent payments on time, hitting that minimum balance, my loan balance was about the same as it was a year ago. And that was concerning to me because I just spent a lot of money trying to reduce this amount, and I look and it's still the same. And the reason being is because with loans, almost all loans, you'll pay your interest first before you touch the principal. So interest is how much you're being charged for that loan. The principal is how much you've actually borrowed to start with. And of course, banks and lenders are going to want to get their cut first before worrying about the principal, so they want to get paid. When you're only paying, or when you pay back the minimum, sometimes that's only enough to cover the interest that you've accrued without touching the principal. And the larger the principal is, the more you'll be charged in interest. As you start to kind of hit into that principal and dwindle down that amount, you'll also notice that the amount you're paying in interest will decrease as well. Similarly, when you get a credit card, it always helps to pay off your balance. Analysts typically will suggest that you keep your credit utilization, or that line of credit, below 30%, but it's more recommended that you actually keep it below 10%. And to put that into numbers there, so using my original $1,000 line of credit as an example here, so if I wanted to keep my balance below 30% or keep my utilization below 30%, that would mean that I would have to carry a balance of no more than $300. So $300 or less each month. And if I wanted to keep that below 10%, then I would have to keep it below $100 each month. And if you're thinking, well, why do they give you access to $1,000 if you can't use it? Don't look at me. I'm still trying to figure that one out as well. But all jokes aside, part of the reason why you should keep your credit balance low is because the higher your balance is for that credit card, or the more you utilize, the higher your monthly payment will be. And the higher the monthly payment is, the greater chance you'll have of not being able to make that minimum payment. And again, that's something that these lenders or credit card companies or institutions are going to see as a risk, because what they're going to be concerned about is that, this is just kind of added money that you have, but you're able to pay it off on time every single time. Let's talk about some common mistakes people generally make when it comes to their credit score and what you might be doing that's hurting your credit score. And the first one is just simply missing payments. So payment history, or making on-time payments, is actually the biggest factor in your credit score. It makes up about 35% of what they take into consideration. And so it's really important for you to, every month, regardless what kind of debt you have, pay it off as best you can. And again, that should be at least the minimum payment, but if not, pay off more if you have the ability to. And that kind of leads us to our next one, which is going to be over leveraging or using too much credit. So kind of again, as I was just saying there, if you use too much credit, then your payments are going to be higher and you'll have a higher monthly payment for using that much of your credit. This part here though makes up about 30% of your credit. So again, it is another very important aspect of your credit score to bear in mind, is if you have a higher utilization, if you're above 30%, let's say if you're like 80%, that is definitely going to have a negative impact on your credit score. And a lot of times too, you might find yourself in a situation, if you're using too much credit, where there's just too much month at the end of the money and you have to miss your payment, which between missing payments and using too much credit, that's about 65% of what makes up your credit score. So those two alone can make or break your credit score, and ultimately can be the deciding factor for if you're able to borrow money, or if you're going to be charged a low interest rate versus a very high interest rate. Another one though is just too many inquiries. So I know when I first started off applying for credit cards, I was just applying to everything. I didn't really know what I was applying for. I was applying for like American Express, I was applying for Discover, Capital One, Amazon's cards, Apple's cards, gas station cards, and that actually hurt my credit score, because they leave these things called inquiries on your report. We won't get into too much detail there, but generally whenever you apply for a new line of credit, you'll have what they call a hard inquiry. And it's basically just the creditors pulling up your report and showing that you are trying to get access to more money, which again isn't something that people generally like to see. They like to see that you can manage your own money and don't need to leverage others, which is where this all gets a little contradicting, because you need credit, but they don't like to see you using it, and so it's a little bit of a slippery slope. But just bear in mind that if you need to shop around for something like an auto loan or mortgage loan, generally a best practice there is to do it all at once, or try to do it within like the same month, because those inquiries can last on your report for about 2 years. Now the effects of those lessen as time goes on and as we get closer to those 2 years, but it's not something you'd want to do once every 6 months, because it's almost like creating a ladder for having those leaving your credit report, and you're better off just doing it all in a short time frame so they all leave at the same time, again, as opposed to just every 6 months having one leave, then another, then another. And so if you can, try to apply for your lines of credit at once. And I guess that'll lead us into the next segment pretty easily here, and that is going to be some best practices or the tips that I have for you. So the first one I have is use sites like NerdWallet to find the credit cards that are the best option for you. Again, as I was mentioning, I was applying for credit cards left and right and was getting rejected left and right. I finally utilized NerdWallet, which is the site I use for my student loans, to see what would be the best credit card for me. And they give you ratings for like odds of approval, or I forget exactly how they word it. But that's what I did, and I just went for the one that had the highest approval rating for me, or highest approval chance, and I was finally approved for a credit card, which was very helpful for me. Now, that wasn't the best credit card. As I mentioned, it was a pretty low line of credit and it had a very high APR, but it was enough to get me started, and that's really all anybody needs to get their foot in the door when it comes to building credit. The next one is to set up monthly payments when you can. And an example I'll have there is for student loans. So Let's say your student loans are $250 a month. If you have the ability to pay $300 or $350 a month towards that, go ahead and set that up. This way, it's on autopilot for you. You don't have to worry about it, and it's not something you have to always be reminding yourself to go ahead and do. I know when it comes to paying things, I don't like paying things, so I always hold off until the last possible second. And so if you have it set up automatically, it'll just take care of itself for you. And again, if your automatic payments are set up to be more than the minimum, then you'll have a greater chance of tapping into that principal balance, which is going to help decrease your monthly payments over time. And when it comes to your credit card, always pay that on time. If possible, keep that below 30%, but really shoot for that 10%. And I know 10% sounds aggressive, and sometimes it might be challenging depending on the month or depending on your situation, but just tell yourself 10% is what you need to aim for, because that'll give you, give or take, a 20% buffer. And this way, if your utilization's at 15% or 20% one month, you'll still be in good shape. But if you're aiming for 30% and you have a bad month and all of a sudden that utilization's at 40, maybe even 50%, that's going to look bad on your report and could have a negative impact. So even if 10% is hard for you to manage, use that as what you should be aiming for, and don't even tell yourself 30, because you'll just end up in a better position should you have a little bit higher of a balance on your account for that month. Another tip is you should never pay for something with your credit card that you can't pay in cash. There could be a time where your available line of credit is actually greater than the amount of cash you have in your bank account, but that doesn't mean you should use it. Again, you just need to be smart with this, and when you start to get access to those larger lines of credit, it just makes it easier for you to keep that utilization lower. So, when I went from a $1,000 line of credit to $5,000, without even doing anything, my utilization immediately went down. So keep that in mind as well. Now, some good tips for this though might be use your credit card for things like your Netflix account or your Hulu account, and then set up the automatic payments so that's always taken care of. Use it for when you get gas in your car, but you shouldn't be using this to buy a TV or whatever, big ticket items. I don't like using my credit card for big ticket items. I always like to pay for those in cash. Or if you are going to use your credit card for a big ticket item, then again, make sure as soon as that hits your card, you pay it off with cash. When you are shopping around for different kinds of credit, whether that be loans or credit cards, make sure you are trying to use the one that has the lowest interest rate. Again, if you just have a higher interest rate, it simply means you're going to be paying more to use that money. Another thing too though is always look for ones that have zero fees. That is a big thing, because why would you pay $150 a year just to have a credit card? To me, that doesn't really make sense when there's ones out there that have it for free, because they're going to make money from these interest payments anyway. So having an additional annual fee on top of that is really just a slap in the face to you as the consumer. So keep that in mind. If they're charging you an annual fee, if it's $20 and it's a really good credit card, sure, that's fine. But if it's $100, $200 annually, look for other options out there, because there will be a cheaper option available to you. And if this is the first time you're looking for a credit card, my big suggestion is look for cashback credit cards. Don't look for ones that give you travel points or anything like that. I like the cashback ones, because as you make these payments, you'll receive cash back. And you can use that cash to continue to pay off your balances. An example I might have is, as those points start to add up, let's say you start to get $100 worth of cash back. Well, you can go out to dinner, put it on your credit card, and then just pay it off, and you essentially got that meal for free because you were paying off your credit card and accrued all of those points from it. So it's free money given back to you. And then as you start to get in a better place financially and your credit score starts to increase, then sure, go ahead and get a travel credit card. But starting off, I think that it's one of the best ways to utilize credit cards is by having that cash back allowance, and again, using that to pay off your balance. If you need to check your credit score, use sites that are free. You should never pay for a credit score. An example of that though might be a site like Credit Karma. Super easy to use, it's really quick, and it's free. Now, don't check your score all the time, but when you do need to pull it, just make sure you're using a site like Credit Karma, because it's not something you should be paying for. And lastly, when you can, look to refinance. or look to lower your interest rates. Now, this is a topic I can go on, and I really can't summarize it well in just a few sentences. So I'll gladly make another video on that, but in the meantime, if you need assistance with refinance, again, check out sites like NerdWallet or Investopedia. They'll explain how that could be beneficial for you, and a site like NerdWallet can actually let you know if it's a good time for you to refinance. So I hope that this video is helpful for you. If you have any questions for me, please let me know, or if you feel that there's anything that I left out from this, please leave that in the comments section down below. If you think this is going to set you on the right track towards having a higher credit score, then please go ahead and give the video a thumbs up if you don't mind. And, well, I guess that's everything. If you haven't subscribed, consider doing so. I hate asking, but consider doing so. Notice I've been losing some subscribers, so I'm trying to do what I can to keep that number up and keep it going. So, all of that said, we'll end it here, so I will let you go ahead and enjoy the rest of your day. You could be anywhere in the world, and you're right here with me, and I really appreciate that. So thank you so much for your time, but I will see you tomorrow for a very, very exciting episode of